Good morning. Welcome to the morning kappa at 8 on a Wednesday. I'm here to present the midweek futures traders technical brief, and we are on week 3, December 2025. Going into the last 2 weeks of the year, markets have actually performed relatively well and holding up in most of the setups. But currently, from the table that we are seeing here, there are some movements, especially in the Asian markets, which have turned negative. We are looking at the Hang Seng and also the China A50. Otherwise, the indices in US have been holding up pretty well. The Dow maintained in positive, as well as the Nikkei, which is actually traded in the US, and also what has turned to be neutral is the both Nasdaq and the S&P 500. Would there be a major move on the corrective side? I think this is very much could be in the offing, because if we look into the commitment of traders later on, there is some indication that this movement may trigger such an event. For agriculture for corn is neutral, and also soybean oil neutral. Soybean oil maintains to be negative. For metals, we have seen a very big run on silver, and that's still very much in the upper end of its performance. Gold trading in a range, and copper, after a good run, also trading in a range. And the other big mover that has actually caught our eye is crude oil, which has now turned into negative after neutral for being 3 weeks. So there is an indication possibly that there will be a bit more downside on crude oil, which also we will share later on in our slides, because this would be one of our product for the market guide. Going into the most popular local product, and this is palm oil. A couple of weeks ago, it was mentioned that the 4,000 has been a very good support for the general trend for palm oil. But I think as events develop, especially on the strengthening of the ringgit, the prices now have trended lower, and it's been trading below the 4,000 for a couple of days. And also the competing dalian edible oil markets also have been weakening. So that has actually put palm oil under pressure. Also, there is a bit of the demand side news. Market observers have noted that the purchasing activity remains to be very subdued, and numerous buyers have already secured their supply requirements for the festive period in early 2026. We zoom into the commitment of traders for the US indices. So basically, I think the positions have been built up as markets fall over comments from a string of Federal Reserve officials from the US Central Bank. And I think most of it is centered around whether there are going to be more aggressive rate cuts for next year. And also the labor markets will be closely watched, especially when a softer labor market and tame inflation could encourage markets to bring forward expectations for the next rate cut. If you look into the commitment of traders, there is actually a mixed sentiment, which is actually being observed here. The Dow has built up in long positions, as well as the Nasdaq, whereas the S&P 500 has built up shorts, And from the perspective of a trader, if we notice a jump of 30,000 of number of contracts in the Nasdaq 100, and looking at the chart, there is actually a different picture that's been painted. Therefore, if any break of a support level, the Nasdaq may go into a corrective mode. And so therefore, later on, I'll be sharing on the guide for Nasdaq. And we look into the first product first. And this is the commitment of traders for energy. And we're going to look at crude oil. As mentioned, crude oil has recently had a really bad run. And its neutral stand has been violated, and there is momentum now generated on the downside. But if you look at the commitment of traders from last week onwards, there's only a slight reduction in long positions. And I think the other one that has caught a lot of people's attention is the natural gas. And natural gas has gone to multi-week low. The reason being the US weather has been facing a warm front. And in the month of December, especially, where we are expecting colder weather to be a cyclical thing, is not happening. And so therefore, natural gas has a massive sell down. But today we're going to look into crude oil. And mainly the news driving crude oil prices is basically the prospect for Russia and Ukraine to have a peace deal. And this is basically in the books, and there is a rising expectations that there is a potential easing of sanctions if this happens. And the US has offered to provide to Ukraine a NATO-style security guarantees, and reportedly the progress to end the Russia war in Ukraine indeed is a very unprecedented step that will spark optimism that talks will be drawing to a close to end the conflict. So I think this is what they call putting some bearish implications on crude oil. And looking at the template for today, we have got a current price of 55.25 for crude oil, and reference price is 55.8. So we are expecting a slight rebound from where we are looking at prices, and whereby the reference price is triggered. We are looking at potential profit price of 54.40. That would give us a value of $140, and anything above the 58 would mean that the whole setup has been violated, and that would give us a loss of $220 loss. So this is the micro Nasdaq, the other product that we are focusing on. As we can see, there is actually a long-term breakdown in prices after a very bullish run-up for the couple of weeks. And as pointed out, the commitment of traders, although building up in long positions, have not seen the Nasdaq returning the favor of doing better. So there seemed to be some kind of hedging mechanism in place here, especially for those who have been holding the Nasdaq stocks for quite some time, and the hedging on the Nasdaq appears to be subduing any potential upside here. So we are looking at prices to rebound a bit more to 25,500. Currently is at 25,200.25. And if that is triggered, then we are looking at a potential profit price of 24,970. and that will give us a value of profit of 1060. And if that all goes wrong, a cut loss level of above 25,860, which will give us a loss of potential USD 720. So that's all I have for this morning. I will pass on to the next speaker. Thank you.
All right. Morning, everyone. Thanks, Vincent, on the midweek futures update. Looking at the Hang Seng Index futures, we can see that for the past two sessions, Monday and Friday, right, both uh, uh, the Hang Seng have printed this negative candlestick, right? Can see that the 26 or 500 point level has become immediate resistance for the Hang Seng, and right now the index trading below the 20 and also 50 days moving average. Now, one thing that actually happened this month is that the China have actually underwent their economic forum meeting, and usually this economic forum meeting is going to guide next year what's the target of GDP for the whole country. And usually after the meeting, the market will actually reacted positively. But this year we do see things have changed after the economic meeting, right? The whole market actually came down, and actually that shows that this year, December, right, we may have a negative returns after so many years of December have a positive returns. So this week, the last defense would be the 25,000 point level, and this 25,000 point have been established since as early as September this year, right? So if breaching this 25,000 point, right, that have actually very important meaning, right? Actually cast a negative vote for a few things, such as the meetings between Trump and Xi Jinping, and also cast a doubt on the economic growth for the market as a whole next year, right? So this week, I think the index would be uh, trading, right, gyrating at this 25,000 point until it have a clean breakout on this 25,000 point. Meanwhile, in the short term, right, there may be a counter trend rebound, right? So opportunities will happen on the first break below 25, right? Then on, if the index really close below 25, then I think more selling pressures will follow through. Okay, looking at yesterday, right, most of the counters have experienced corrections, especially since time stock code 20 actually break their multi-month support level, and Xiaomi has been trending lower, and so far no sign of rebound yet, and so the only saving grace is that the bank stocks and the insurance company are holding up so far, and some of the tech stocks, such as the robotic teams, they are holding up, right? The rest, the traditional big cap counters, Xiaomi 700, 981, these three counters are actually have been experienced a very strong selling pressure for the past 1 month. Okay, and so in light of this market, right, we'll be looking at those who are trending upwards, like Standard Chartered, right? Stock code 2888 that break past the 180 Hong Kong dollar resistance. Next R1 will be 190 and followed by 200. Downside support is 175. Secondly, we have Anta Sports Products 2020, right? They underwent corrections since it fell below the 21 days moving average, and right now they are eyeing to cross above this 82.50 resistance. So if breakout happen, Anta will climbs towards 85 and 87. Downside support is 80. So we have one breakout stocks 2888, and then one counter trend rebound 2020 Anta. As for the S&P 500, it underwent corrections for the past two sessions as well, right? And the market was lifted higher by Tesla. I think this week market is still digesting the news that SpaceX is going to go for IPO this year, and sentiment has been bullish on Tesla. Now, despite that, we can see that the Nvidia is undergoing corrections, and so far is yet to find a meaningful interim support. And the rest of the magnificent seven is also undergoing a correction, especially Oracle. After they have published their results, stocks have actually gapped down. So most of the tech stocks actually experience selling pressures right now in the US market. Now, based on the past few years, December month always a bearish month for the US. So I would like to see now after this month, next January, whether the XPX can sustain above this 6350 level. So in this December, I think the XPX will come pull back towards 6006. I think the last defense will be a 6350. Okay. As for the Malaysia market, I think few counters that are worth to pay attention to. Firstly, the UAL, which have a break past a resistance of 110, followed by Boeing. Right, they have staged a gap up about 2 weeks ago. So after the gap up, right, they still stay above the 195 support level. So these two stocks actually are posing a very strong momentum so far in the US market. Secondly, for the okay, now move to the Malaysia market. So yesterday, the Anwar have actually announced on the new cabinet, right? After the announcement, market have reacted positively. Our FKRI managed to recoup the intraday losses and close in the positive territory. So right now, the FKRI is eyeing to test 1650. Breakout happens, it will move towards 1675. Downside support remains at 1006. This psychological support level, and followed by 1570. So based on the past record, right, in the December month, index usually close positive. So hopefully for the next 2 weeks, the bullish momentum could follow through, that we can see an upside breakout. So far, I think one of the very important factor that do believe the market sentiment is the strengthening of the ringgit, and also we can see a very strong participations on local institutions in our market, right? And both these two factors may continue to lift the index higher. Nevertheless, on the downside, right, this 1006 will serve a very important psychological support for the FKRI. So you can set a stop loss at 1006. Now then on, now FTPO have experiencing a series of selling pressure after the MPOB released their data on the 10th of the month, right? You can see that the yesterday, right, we moved into the new contract. Despite that, the FCPO continue to experience selling pressure. It breached the 4,000 mark and closed at a new low at 3962. So you look at the FCPO overall, right? The market actually came up from 3008 a few months ago, right? So if this round it breached the 3009 or even 330, right? Negative sentiment going to persist in the market. So on the upside, resistance is 4180. So we have adjust our stop loss lower from 4002 to 4180. Now overall sentiment remains negative on the FCPO due to a very high inventory level, and secondly the export market remains soft due to a very high inventory at India side. So the largest importers, i.e. the India, is not hurry in importing the FCPO, and also the soybean oil has been actually moving downwards for the past 1 week. Now all these factors has give a negative sentiment on the FCPO. Of course, another bullish news that give a support on the market is that next year market is looking for the B50 next year, but hopefully this news is going to support the price not to go lower further. Now, as for the technical stocks, yesterday, Queenie have published a report on Gagasan Nadi. All right, so the share price have been moving sideways, eyeing to a stage breakout on 42 cents. So if the breakout happen, it will move towards 44 and followed by 46 cents. Downside support will be at 40 cents. And secondly, the Supermax counter actually looked interesting to me. Last week, it have actually underwent two series of very strong selling pressures. So I think that these two selling pressures is what we call the extreme selling, right? That the interim support may have formed at 32 cent half. Right, in light of this low trading volume market, right, Supermax may can stage a counter trend rebound towards 355, followed by 38 and also 40 cents, right? On the downside, right, this 32 cent half will be their interim support. Now, meanwhile, you can also look at our Aidil report that he have a trading buy call on Supermax, which I published just last week. Daniel Welesto have actually have a news yesterday that they are going to sell one of their jackup rig for about 200 million, right? And then proceeds are going to give out as special dividends. So you can see that so far the Welesto has been actually moving upwards, and one of the things that you can see that based on the price volume profile, a very strong support is actually 24 cent half. So as long as the Welesto stay above 24 cent and half, right, the momentum should stay intact, right? You can see that upside R1 projected at 29 cents and followed by R2 at 31 cents. So I think among the oil and gas counters, Welesto actually is one of the counter that the Insti has been actually looking at due to their dividends payout that could happen in 2026. Right, and as for this morning trading stocks, firstly we have Telecom Malaysia (TM) that break past 7 ringgit 95 cents. So next R1 will be 8 ringgit 25 cents and followed by 8 ringgit and 50 cents. Downside support is 7 ringgit and 70 cents. Secondly, we have DNO that about to break past 84 cents. So if breakout happen, DNO will be traveling towards 92 and followed by 1 ringgit. Downside support is 76 cents. So we have one breakout stock, TM, and counter trend pending rebound, pending breakout, DNO Green Technologies. So I'll stop here and pass the stage to Aidil on the REITs sector report. Thank you.
Hello. Hi.
Yep.
Okay. Hi. Good morning, everyone. We just published our REIT sector results wrap report for third quarter 2025. At a high level, performance remains defensive and largely in line with expectations. The Malaysia REIT index is about 8% year to date, outperforming the KLCI, which is still broadly flat. This reinforces our view that MREIT continues to see as a stable and domestic-centric income play, especially in a volatile global macro environment. If you break it down into drivers, the first is fundamentals. Across our coverage, occupancy remains stable, rental growths are healthy, and earnings visibility is still good. So of the 8 names under our coverage, 5 came in line, while 3 surprised on the upside. Sunway REITs stood out this quarter with a net profit of up about 31% year on year. This was mainly driven by full contribution from their new assets, a list of assets that were acquired last year. So these are the Sunway 163 Mall, Sunway Kluang Mall, Aeon Sri Manjung, and 6 giant hypermarkets, including an industrial asset, which is Sunway Industrial Pride. This on top of good performance from the existing malls like Sunway Pyramid and Sunway Carnival Mall. So what we learned from the recent quarter is that now we can take comfort knowing that the key fiscal reforms like minimum wage hikes, SST expansion on rentals, and also the base electricity tariff, which we thought initially may cap the upside on rental growth, but it now appears to be manageable. Across coverage, management teams continue to guide for healthy occupancy as well as a good rental growth. The second driver is rates. REITs are sensitive to borrowing costs, and in the current low interest environment, this is a positive for the sector. Dividend yields are still meaningfully above government bond, with a spread around the long-term average levels. Bank Negara has kept the OPR steady after the July cut from 3% to 2.75% now, which helps the REIT environment positive as they will have a lower refinancing cost and more room to pursue acquisitions. Looking ahead, the sector also has few structural tailwinds. A low interest rate environment is supportive, while there's policy initiative like Visit Malaysia 2026, which should benefit the retail REITs through higher tourist footfalls, and also the National Energy Transition Roadmap and National Industrial Master Plan 2030, which would provide longer-term support for industrial assets. We also expect 2026 to see a wave of potential REIT listings by large developers with roughly 10 to 11 billion of assets likely to enter the market next year. One area to watch is withholding taxes. Currently, there is a 10% concession on REIT distributions that is due to expire this year, 31st December 2025. And we noted that there's been no formal confirmation yet on whether it will be extended or not. If it expires, some investors, especially the individual and foreign funds, could see a lower net dividends than what they are receiving right now. That said, we think the overall impact to the sector should be limited because a large portion of REIT ownership still sits with domestic institutions and GLCs, which are normally long-term holders, and in a way, their returns are not impacted by the expiry of the 10% concession. So putting everything together, we remain overweight on the sector. By nature, this is a slow and steady sector. You're not buying REITs for rapid growth, but for stable and predictable cash flows. Sector fundamentals remain intact. Funding conditions now is supportive, and the near-term risk looks manageable. For investors who value consistency, we believe REITs should continue to play as a reliable defensive role. So I'll stop here for now. Feel free to go through our reports. Our top pick right now is Pavilion REIT because of its ability to capture the tourism-related upside from VMY 2026, and also they have a larger floating rate exposure, which benefits from a low interest rate environment. Have a great week ahead, and thank you everyone. Bye-bye.